All right. So let's dive right into this whole thing with mortgage rate cuts. We've seen some pretty big lenders, like Halifax, HSBC, Clydesdale Bank. They've all come out and said they're going to be cutting rates. And, for anyone who's been kind of watching mortgage rates just go up and up and up, this has got to feel like a big relief, right?
Yeah, it's definitely a shift in the market that's caught a lot of attention.
Yeah, for sure. Because when was the last time we heard banks, actually wanting to make borrowing cheaper? So what's the story?
Well, there's a few things going on. First, let's look at the specifics of these cuts that are being made. So Halifax, for example, they've cut rates on remortgage deals by up to zero point 0.3 percentage points. So that means if you're refinancing your existing mortgage, you can actually save a good chunk of money each month. They've also reduced rates for home movers and first-time buyers as well. But the reductions are a bit smaller, like up to 0.11 percentage points.
Okay, so to put those numbers into perspective, let's say you're looking at a 5-year fixed rate mortgage with Halifax for like £200,000. Their current rate is 4.18%. But now with that zero point 0.3 percentage point cut, you could be looking at saving, hundreds of pounds over the life of the loan. Plus, on top of that, they've even got a £999 fee on this specific mortgage.
Right, and Clydesdale Bank's getting in on the action too. They're cutting rates on 2-year and 5-year fixed-rate mortgages by as much as 0.28 percentage points. And HSBC, they haven't given us all the details yet, but they have announced they'll be cutting rates across their residential and buy-to-let products.
Buy to let, that's for rental properties, right?
Exactly.
Okay, so it sounds like there's definitely a trend here. Multiple lenders all making moves to reduce their mortgage rates. Makes you wonder,
Yeah.
are they all just feeling generous all of a sudden?
Well, I don't think generosity is the main reason here. It's more likely that they're responding to signals from the Bank of England. Financial markets are actually predicting that the Bank of England will cut its interest rate tomorrow, down to 4.5%.
So they're trying to get ahead of the game, anticipating that the Bank of England's going to force mortgage rates lower anyway.
Exactly.
Smart.
Experts like Andrew Montlake from Carico, he thinks these cuts could actually trigger a domino effect, where other lenders will have to follow suit just to stay competitive. And Jack Tutton from SJ Mortgages agrees. He says that lenders are watching the Bank of England very closely.
Okay, so there's a clear connection between these cuts and what the Bank of England's expected to do. But it still makes me wonder, how are these lenders even able to cut these rates in the first place? Like, what's changed that gives them this wiggle room?
But that's where things get a bit more technical.
Yeah.
We have to talk about something called Sonia swaps.
Sonia swaps sounds like something out of a financial thriller, not something that affects my mortgage rates.
Yeah, it does sound a bit intimidating. But to understand these Sonia swaps, you first need to understand that mortgage rates aren't just random numbers someone comes up with. They're based on financial instruments that reflect the cost of lending between banks.
So it's like a chain reaction. What happens with the banks lending to each other ends up affecting the mortgage rates offered to normal people.
Exactly. And these Sonia swaps play a big role in that. Think of it like this. The wholesale price of coffee beans. If that price goes down, coffee shops can lower the price of your latte.
Okay, I like that analogy. So Sonia swaps are like the wholesale price of money that affects the retail price of mortgages. And you're saying these swaps have been going down lately.
Exactly right. For example, since January 16th, the rate for 5-year Sonia swaps has dropped from 4.17% to 3.91%.
Mhm.
And the rate for 2-year swaps has gone from 4.29% to 4.05%.
That's a pretty big dip. So these falling swap rates are basically giving lenders more room to cut their mortgage rates without, hurting their profits too much.
Exactly. They're taking advantage of this opportunity to offer better rates, attract more borrowers,
Yeah.
and maybe even, gain a bigger share of the market.
So it's not just them being nice, it's market forces and strategy all mixed together.
Exactly. Reacting to changes and making moves to stay ahead.
Sounds like we're seeing a turning point in the mortgage market. And it's important to understand what this means for all of us, those of us looking for a new mortgage or who already have one. So let's dig into how these rate cuts could impact you directly. So we've talked about, what these rate cuts are all about and how these Sonia swaps are giving lenders the power to, actually make those cuts. But what about the why? Why is the Bank of England expected to cut rates anyway? What's the bigger picture here?
That's a really important question. It all comes down to the health of the UK economy,
Mm.
which, like a lot of economies around the world, is facing some headwinds.
Are we talking about a potential recession?
Well, there's definitely been a lot of talk about that possibility. Inflation is still high,
Right.
you know, and that's really eating into people's purchasing power. making it tough for businesses to plan for the future.
Right. And that probably affects consumer confidence, too. If people are worried about what's coming next, they're not going to spend as much. And that can slow the economy down even more.
Yeah, exactly. It becomes a vicious cycle. Consumer confidence drops, businesses hold back on investments in hiring, then you get job losses. And that just makes consumer confidence even worse.
So is the Bank of England trying to break that cycle by cutting interest rates? Hoping to give the economy a little boost?
Precisely. Lower interest rates make it cheaper for businesses to borrow money and invest. It also encourages people to spend instead of save.
It's like a jump start for the economy.
Yeah, you could say that.
But it's not just about what's happening here in the UK, right? Global events must play a role too.
Oh, absolutely.
Yeah.
The global economy is all interconnected. What happens in one part of the world can ripple out and affect everyone else. For example, the U.S. Federal Reserve recently slowed down its rate hikes. That could signal a potential change in global monetary policy.
So it's like a big game of chess. Central banks all over the world making moves based on this complicated web of economic factors.
That's a great way to put it. And it highlights how important it is to stay informed, understand the bigger picture.
Speaking of staying informed, you mentioned earlier that even with these cuts, mortgage rates are still pretty high compared to what we've seen in the past. Can you give us some context for those who might not be familiar with the long-term trends?
Sure thing. Just a few years ago, it wasn't unusual to see mortgage rates below 2%. Some people were even getting rates below 1%.
Wow, that seems like ages ago. So even though these cuts are welcome, we're still nowhere near those record lows.
That's right. It's important to remember that. Don't assume that we're going back to the days of ultra-low mortgages.
Right. Keep expectations in check. Don't make any rash decisions. Okay, so to sum up what we know so far, lenders are cutting rates, maybe because they think the Bank of England is going to cut rates too. And this is all happening because of concerns about the UK economy and global trends. These cuts could be good news for borrowers, but we have to keep in mind that rates are still high compared to the past. So now let's talk about what this means for you, the listener. Whether you're thinking about remortgaging, buying your first home, or just trying to understand the financial world, there are some key things to keep in mind. So where should we start?
I'd say the first step is to arm yourself with information.
Knowledge is power, right? Especially when it comes to big financial decisions. But sometimes it feels like the world of finance is deliberately confusing.
I get that.
Yeah.
That's why we're here to help break it down. One really helpful tool is a mortgage calculator.
You know, when I was buying my first place, I spent hours on those online calculators trying to figure out how different rates and loan terms would affect my monthly payments. It was actually kind of fun, like a puzzle.
Yeah, exactly. Mortgage calculators can help eliminate a lot of the guesswork, and there are tons of free ones online, including the one offered through, this is a Money's partnership with L&C.
And you can adjust different things, right? Like the loan amount, the interest rate, the term of the loan, so you can see how those changes impact what you can afford.
Exactly. You can test different scenarios, get a feel for what's realistic for you. And if you're feeling overwhelmed by all the options and jargon, remember, you don't have to do this alone. A mortgage broker can be a great help.
A mortgage broker, I've heard that term, but I'm not really sure what they do.
Basically, they're like a middleman between you and the lenders. They have access to loads of different mortgage products from various banks and building societies, and they can help you find the best deal for your situation.
So it's like having someone shop around for you.
Pretty much. They can save you time and stress. And they can often get you better rates than you could find on your own. Plus, they handle the paperwork and negotiations.
Sounds like a win-win. So mortgage calculators for the numbers, mortgage brokers to guide us through the process. Any other resources our listeners should know about?
Well, information is key. So staying current on financial news and trends is always smart. Websites like This Is Money have great coverage of the mortgage market. Articles, expert analysis, comparison tools.
The more you know, the better you can make good decisions.
Absolutely.
Okay, we've covered a lot today. We talked about the rate cuts, the reasons behind them, what they could mean for borrowers, and even tips for navigating the mortgage market.
It's been a deep dive for sure.
But before we finish up, I want to leave our listeners with something to think about as they continue their own financial journeys.
Sounds interesting. What's the question?
We've been talking about these rate cuts as, good news for borrowers, and they definitely could be.
Yeah, but...
There's always a but, right?
Yeah.
So what's the catch?
Well, the thing is, economics is never that straightforward. There are always potential downsides to think about, unintended consequences. For example, lower interest rates can help stimulate the economy, but they can also lead to inflation.
Yeah, right. Because If it's cheaper to borrow money and people have more to spend, that increases demand for goods and services, and that can push prices up.
Exactly. And if inflation gets out of control, it can really erode the value of savings and investments, make it harder for businesses to plan ahead.
So lower mortgage rates might seem great now, but could lead to bigger economic problems down the line.
Yeah, it's a classic example of no free lunch in economics. Every action has a
Yeah,
reaction.
gotta think about those ripple effects.
Absolutely. And it's not just inflation either. Lower interest rates can also create asset bubbles, especially in the housing market.
That's interesting. How do lower rates contribute to bubbles?
Well, when it's cheap to borrow, it can fuel speculative buying. People might take on bigger mortgages than they can really afford, driving up demand and prices for houses. And that can create a situation where prices get totally detached from, the real economic fundamentals, leading to a bubble that eventually has to pop.
So lower rates could make it easier for some to buy a home, but could also make the market even less affordable for others.
Exactly. It's complicated. No easy solutions.
So we need to be cautiously optimistic about these cuts. They could be a good sign, but we got to be aware of the risks too.
Yeah, I think that's a good way to look at it.
So for our listeners who might be feeling a little overwhelmed by all this, what's the main takeaway? What should they be thinking about?
I think the most important thing is to stay informed. Do your homework. Don't just jump at the first good-looking offer you see. Take your time to figure out your own financial situation, your goals, your risk tolerance.
And we talked about some of the resources out there to help people with this. Mortgage calculators, mortgage brokers. There are also financial advisors who can give personalized guidance.
Exactly. Don't be afraid to ask for help. There are experts who can help you make sense of everything and guide you towards the best choices for your situation.
And even if you're not looking to buy a house right now, these trends can still affect you in other ways. Inflation impacts everyone. Understanding how central banks and governments respond to economic challenges, that's essential for navigating the financial world.
Very true. Financial literacy is a journey, not a destination.
Well, I think we've covered all the angles on this one. We looked at the mortgage rate cuts, why they're happening, the potential pros and cons, and even some practical tips for staying informed and making smart financial choices.
Yeah, it's been a great discussion. I hope our listeners are feeling a bit more equipped to handle the ups and downs of the financial world.
I hope so too. And even though this deep dive is coming to an end, the conversation doesn't have to stop here.
That's right. Keep learning. Keep asking questions. The more you engage with these topics, the more confident you'll become in making decisions for your financial well-being.
Couldn't agree more. Thanks so much for joining us on this journey into the world of mortgage rate cuts and what they could mean for all of us. It's been a pleasure as always.
The pleasure was mine. Until next time.
And to all our listeners out there, thanks for tuning in. We'll see you on the next episode of The Deep Dive, where we'll explore another fascinating topic, unearthing those hidden gems of knowledge and helping you understand the complexities of the world around us. Until then, keep those brains buzzing.